Hey, everybody. Happy Friday. Welcome to Charts and Coffee. Hope everyone is doing well. Great to see you all. All right. So I see we got some questions in. And as always, this show is about your questions. Not a lot to talk about in terms of this post-Powell environment. You can see on the S&P what we're dealing with. Please remember this. When we're looking at a market up or down, always remember what it's moving up or down relative to. Are we going anywhere new is always a question that I ask. Are we going anywhere? Are we breaking any near-term support and resistance, etc.? So you can see the support and resistance that's drawn on this chart. And, this is the Darvis 2.0, just kind of telling us this is just where we're hanging out. That's sort of the well-worn, beaten path, if you will. And we're just going to continue to see what, if anything, the market decides to do from there. Let's also keep in mind the 200. We're south of the 200 at the moment. This is the EMA. This is a simpler propulsion. And so, being below that 200, there is a mild bearishness that we have just being below that equator, like I talked about in last night's free video. All right, so let's get to it. Let's jump into the questions here. Please be sure, I know we don't talk about this every time we're in Charts and Coffee, but please do make sure you are keeping an eye on the calendar. My preference, and for many, many years, has been Forex Factory. Trading Economics is a neat second choice, especially if you like to geek out on the data and you're looking at data in countries like Brazil, Mexico. You want specific data points for positions that you might have. Trading Economics is a pretty good one for that. So please make sure you're keeping an eye on that, as well as whatever economic calendar you use for earnings, because we are still in the heart of earnings. All right. So with that being said, let's jump into our very first question. Hey there, Christian. Can we revisit the idea of not front running a downtrend? Sure. Which, by the way, what do I mean by front run a downtrend? I think it's okay oftentimes to be a little presumptuous about uptrends, about bullish breakouts, but downtrends are different animals altogether. So we don't want to front run the process. We don't want to front run the checklist, the criteria that we want to see. So can we revisit the idea of not front running a downtrend versus being okay to front run an uptrend? So yes, I think it's easier to buy support in a sideways market when you're looking at an uptrend. I'm trying to think of something. This may be a decent example, Walmart. I'm trying to think of sort of a laggard within the XLP. Now, all my cards on the table, I have a number of XLP, 2 open trades we have on in the mastery. We did not go with the XLP, but there are a couple laggards. I don't want anything to do with Costco because the way it's moving lower, so there's no front running of any uptrend there. Walmart could play catch up to this particular boat, could play catch up to the tide. Not a great example, but if you're looking for an opportunity to take advantage of a neutral trend, right? A little bit of bearish momentum, that's okay, because that's usually what carries us down to, you guessed it, we've got a pretty nice support zone here. So by now, I would imagine most of you have this Darvis 2.0 running on your charts, because you can head on over to the Countdown Trader. And by the way, when you're there, it's a little confusing, my apologies, but when you're there, you'll see, I think, propulsion and grab. Just click on the Thinkorswim link when you get there. And what it will do is open up the box folder with all the free indicators. I know it's a little screwy because you can't see the Darvis link. Just click on the Thinkorswim for grab or propulsion, and it opens up a neat little link where you can grab the ThinkScript and import it into your toss. And then these lines are on your chart. Look at the zone. Look how beautifully that is capturing, identifying this support zone. Oh, gorgeous. And then because we know we have a neutral trend, now that activates, boom, you guessed it, our slow stochastic. Okay. So that's an example of maybe saying, look, this is a little bit of a laggard. I would like to perhaps be long. I know I don't have a downtrend, but I know I don't have an uptrend yet either. So that's not a great example, but it also helps me show you a setup that has some proximity. Okay. So I'm bullish. Well, if you're bullish 18 months out, Christian, go to the weekly chart. Yeah. Then jump on over to the weekly, because that to me is a time horizon probably more applicable and helpful to a longer time frame. James, how are you? Good morning. When it comes to using a CCI indicator, what environment do you look for? Is it best in neutral markets? James, I know you know this pattern, and I know a lot of you know this pattern as well. The CCI is perfect for 1, 2, 3 confirmation. So when you're looking at a 1, 2, 3, you see it as either a continuation pattern or even more so a reversal pattern. So we're going from red, 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 yellow to eventually that trend reversal to a bullish, potentially a bullish breakout. The CCI, and you don't need to pull the CCI on your screen. All you need to do is know whether or not it's above 100. But specifically with a 1, 2, 3, I like it with the reversal pattern. All right. That would be an ideal environment. In fact, that's a fantastic setup. That's really a wave reversal, trend reversal, CCI confirmation. All right. All right. TT gold. Yes, I did an update on gold on Wednesday. And I said, hey, we're waiting for a minor low. Please wait for if you might remember, please wait for that pause candle. And I was looking for it in this area. Instead, what did we get? No pause candle. We got another pushing the upper end of the historical volatility envelope sell-off. What does that do? It resets that setup again. And if you recall in that video, I said this was an aggressive, I like to call it aggro. Remember the crocodile from Steve Irwin, Crocodile Hunter? Yeah, that's what I named that after, aggro. It's got teeth, right? We're going to be cautious. So that's an aggro, and the pattern never set up. We're right at, in fact, my futures contract, already the limit order to buy that I had placed, and I placed mine at 1782, has already been hit, and I've got a long position here. So GC, play micro gold, MGC, GLD. Now GLD, of course, we have to wait for 930. But when you're taking a look here at that, we finally made it down to the lower end, our Darvis 2.0 support. The only thing I wish we did have, I mean, we have a beautiful neutral trend. We have a neutral momentum environment. Love that. The only thing I would have said would have been a cherry on top is to be at or even below the 20 reading on the slow stow. Now, if you have a ready aim fire, cue that up. But this is where we're at. Now, you're saying, Rog, I'd rather wait to see if, rather than buying exhaustion, I'd rather wait to see if we can break above, start moving higher. Well, how would I do that? This could be a minor low. Down, lower low, and then on Monday, can we take out the high? So it's a couple ways to do it. That's what I see on gold. And thanks for the question, TT. All right, next up, AbbVie. Hey there, Scott. You got it. Taking a look at AbbVie. Now, we have a lot of, so let me show y'all something here. This is the multi-chart, right? This is those tops indicators that I've already shared with you all. The wave, grab, propulsion, Darvis. I've got my label on there just to help me identify. And I'm looking for my XLP. XLV. All right. So what do I have here? I have the tide by way of the XLV in the upper left-hand side, left-hand corner. And then the stocks in order of their high concentration weighting within the XLV. And there are a couple places where we're neutral, bearish to neutral, right? Bearish, neutral, right? However, there's only one place, Scott, way to find the outperformer, Yahtzee. How easy is that? How easy is that to key in the stocks that are related to one another because they're involved in the similar niche or sector or index? This case is healthcare. And then you compare them. I would say my next best choice would be Bristol Myers. So AbbVie. So first of all, what you trade is more important than how you trade it. What a fantastic guy. AbbVie, I'm with you. I just need a pullback. Same thing with Bristol Myers. So in the wave, green, 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 bullish momentum, bullish trend, and that's what we're looking for. So I can't buy here, right? I've got to buy closer to the wave again. And in the same vein of what you asked me, this is a really nice move in Bristol Myers. Again, it's neutral right now. That's not really a problem. Neutral where the uptrend was preceding the current neutral environment. So when these labels that I know a lot of you actually probably have on your chart, this label up in here, this is what's happening now, today's candle. And then what I have along the bottom here is the history. There's a lot of value in having the history, but this is important as well. So this is the hard right edge. This is right in here. And then the history tells you, yeah, the previous trend was up. I have a market that's barely neutral, but clearly it has still with it a lot of bullish bias. So great question, Scott. Awesome eye on that AbbVie. Kathy, how are you? I'm just wondering if I could go further into break-even stops. Oh, sure. Do I stick with this method even in the face of this wild volatility? So remember, Kathy, there's only two reasons. Awesome question. And yes, I'll be doing the Q&A. We call it the Friday Ask Me Anything session. Indicators, settings, layouts, whatever questions you all have is so perfect just to do the Ask Me Anything session at the end of the day on Friday. And yes, you could absolutely leave that for then. But let me dive into it a little bit because I think it'll help the group. We only move to break even upon one of two things. If we hit an optional or first target where you may or may not want to scale out, you still got to go to break even. So reaching that initial target, whether it be the first or optional, always a good time to move to a break even. And then when you absolutely do hit that first profit target, you must move to the break even. I prefer scaling out at 50% of my position, and then I'll move to that break even. So that's really it. It's not terribly difficult. And I think it's even more important in this volatile environment to protect your capital and to protect the fact that if you put on a good trade, I'll give you a great example, Kathy. We had trades in Coke, General Mills, and Schwab, as well as Wells Fargo. Those four trades got put on courtesy of Powell. Yesterday in the morning, these things, as you can see, shot up. They hit my initial target. We scaled out. I didn't wait for the close. I didn't wait for a certain time of day, nothing. My target is met, scaled out of 50% of the position, break even stop. I think it's even more important in this environment. Awesome question. Thank you very much. Is the Nasdaq, hey there, Ron, is the Nasdaq trying to retest its lows? Well, I don't consider it necessarily a retest any longer. There's a few things that tell me the Nas is in a very different environment. Let's start with the structure, right? Hey, gang, how easy is it to understand structure? This is Dow 101 color-coded because I can't help myself. I like color-coded. It makes it really easy. Bearish momentum, bearish trend, red over red, just a sea of red grab candles. I mean, there's just so many reminders that this is a downtrend. Okay. When we have a trend, put the oscillating overbought, oversold indicators away, please. Now we're talking about short the rip. Why else would I be pretty darn bearish? We're south of the 200 propulsion. And take a look. My propulsion dots are just lit up like a Christmas tree. I mean, look at this thing. It's lit up like the 4th of July, telling me, hey, we've got plenty of selling pressure. So if I get a rip higher to the Darvis, to the 13, I'm good with shorting this thing. So I will tell you, whether or not it does, my friend, frankly, I don't know. Well, nobody does. Is it likely we could retest the lows? Yeah, maybe. But what's I think more valuable, what's going to give us a setup is, can we retest the upper end of the Darvis? Can we go up and check the 13 or 21 and then get our short the rip? This is the index that is red over red. This is the index that is bearish momentum and trend. So I don't know, but I guess I'm trying to point out the actionable levels, Ron. And you're probably right. It's likely to at some point, but in the meanwhile, does it get up to a resistance level that we can use? All right. All right. Next up, Mark, good morning. A bit back, you mentioned UUP. Yep. Dollar index, UUP. And I've also mentioned 6E. So that's all the same conversation. At this point, I'm up 20%. Oh, well, cool. On UUP. So long UUP or short FXE, 6 of one, half dozen the other. Beautiful trade. We've been very bullish dollar. And in the same breath, we've been very bearish euro. We're going to have a beautiful gap down on these. So this is a macroeconomic, Mark, I know you know this, but everyone, this is a macroeconomic trend. Gang, macro does not change day to day, nor does it frankly need to be discussed day to day, because what happens is you start to get too much of a news influence. Macro is the rate of change study, the trend, the directional study of monetary policy, money supply, inflation, growth, GDP, and then you can add a fifth pillar, which right now, because the U.S. Central Bank has a dual mandate, it's jobs. Everything else falls under that and influences that, but it's not going to help us with macroeconomic analysis. Macroeconomics are not news, and they're not all the ancillary data points unless they somehow reflect or affect growth, inflation, jobs, right? Which in turn is how the Federal Reserve manages all the knobs and dials and levers of monetary policy, the printing press, asset purchases, and the balance sheet, right? So you can see how they're all related. The dollar had an uptrend, so it's got this technical reason to be long, as the euro has the downtrend, because they have nearly a tick for tick inverse correlation, negative correlation. And we have the macroeconomic trend, which is, if we're going to see higher rates, that's generally speaking one of the broadest, most basic strokes of being bullish that currency. So whatever central bank amongst the G7, G8 countries is going to flick the switch to hawkishness, if anyone else embraces the tightening cycle, watch that currency, because it's likely going to do the same thing. Don't trade it against the dollar, though. This is where it gets a little bit more specific, because if the dollar's already strong, you don't want to trade a strong currency against another strong currency. You want to find a weaker currency to trade against it. We can talk about that later. Thoughts? Trail your stop, scale out, enjoy the ride. That's what I would say, Mark. Pay yourself, right? Pay yourself while you can, not when you have to. Move to the break even, right? Move to the break even. We have a saying here at Simpler. John talks about it a lot. And a lot of you probably know it. Feed the ducks while they're quacking. Feed the ducks while they're quacking. In other words, if you've got the bullish Momo, that's the quacking, I guess, right? Maybe I should change Momo to quack, quacking. So while they're quacking means while we have the bullish Momo, pay yourself while you can, and then move to that break even. So beautiful trade. Way to stick with it. Very inexpensive trade. Isn't it beautiful to have low cost options, Mark, that you can scale into and withstand some of the volatility? Very nicely done. Very nicely done. We love those low cost options because we're able to trade them in multiples and we're able to manage risk. I can trade 10 $4 options at different levels and scale in, or I could trade one $40 option. I think you know which one I'd prefer. I don't mind the 10 $4 options. It's not a small account approach. It's a scalable approach, right? And I would love for everyone to embrace that. Corn, Michael, ZC and ZS. Love those two trends. I'm going to send out the video to the sector folks here in just a little bit this morning. ZC, ZS, Archer Daniel Midland, Deere. There's a lot to like. Oh my gosh, Tyson. There's a lot to like in an environment where, yes, the Federal Reserve is, embracing hawkish policy. We know we're going to get the rate hike in March. By the way, all the chatter on television saying there's 5 rate hikes baked in, please don't believe them. That is not what is baked into the market right now. If anyone knows how to read Fed Fund futures, I've shown you all that in free videos and in premium videos. We will be returning to that. There is way too much being made of 5 or whatever nonsense I saw on television. We definitely have March baked into the cake. And then after May, things get a little bit more hawkish because it's looking like another 1/4 point hike could come in May. And then things get all screwy after that. There's no dominant psychology saying there's a discounting, and I'm meaning 80% plus expectation of another hike. It just gets very even, and there's a lot of varied opinion. So be careful what you're hearing the chuckleheads on television say. They are just way, way, way too fear-mongering right now with the hawkishness. But then again, that's what they do. They sell ad revenue. Okay. Salty Raghee's going back in the corner. All right. Be careful with that because I do not see that right now discounted. All right. So yes, keep an eye on that ZC. And then you can play CORN or even SOYB. But please remember that these ETFs can be a little spotty in their liquidity. So please, please, please be aware of that. All right. And gang, just like that, I am out of time. So good to see so many of you. Thank you. Thank you for the questions. MO Dale, I like MO a lot, by the way. Double green, part of XLP. Beautiful. Buy the dips on that one. Double green, meaning bullish momentum and bullish trend. Fantastic. LCID and Tesla. LCID, be careful, my friend. We have a neutral trend. Yes, we're duking it out with the 200. I would wait for either this zone. Take a look. This is where I say, gang, you're just not going to find anything that's going to do what the Darvis 2.0 does. And I know I harp on this, but there's just so few free things that I know. A lot of indicators are great, but this is one of these where I just tell you, gang, it's a no-brainer. It's a no-brainer. Put it on your charts. It's going to help you with every single type of trading that you do. That's what the tops layout, which is what you're looking at right now. This is my primary foundational framework that I made for myself decades ago. Whatever you do is going to work better when you understand automated support resistance, market structure. It's not going to supplant anything. It'll only supplement it, right? So maybe wait for that zone, but the 200 could be tricky here. My friend, be careful of that. Maybe wait for a minor low, which is a video that I shared with you all just, I think this week, right? Oh, no, maybe this last week, last Wednesday. Check it out. Last Wednesday, the pattern. I think there was a video, the pattern you should know or know this pattern, something like that. Check it out at the Simpler Trading YouTube channel. All right. And then we're going to wrap it up with Tesla. And the same thing. Be very careful here. However, again, neutral trend, bearish Momo. So now what? We're duking it out with the 200, but we do have, take a look here, we do have those stochastics saying, yeah, we're getting ready to go. I have a nice Darvis area, not quite holding. And then I have another Darvis area right back here. I don't know that we're going to get down there, but that's your zone. That's your zone. Think about the historical volatility. Think about normal price movement. That's not a wide zone considering the typical movement that Tesla could see in a single session. All right. So I hope that helps. Gang, I will see you all Monday. Same time, same station for Charts and Coffee, Caffeinate and Dominate. If you're a member of, well, gosh, Futures, Options, or the Sector Secrets Mastery, we have our Ask Me Anything. We'll pick up the conversation there. 3 p.m. today. In those rooms. All right, gang, be good to each other. Thank you for being a part of the Caffeinate and Dominate crew. Yes, thank you. No, thank you, gang. And then Hulk, smash that like button on the way out. Leave your comments and questions as always. I check them. I even answer the trolls. Yeah, I was answering a troll this morning. I think they're always surprised when I go toe to toe with them. They think, oh, she's never going to answer. The heck I won't. Be good to each other, gang.